Hey everybody, what's up? It is Wednesday, September 30th, end of the quarter, end of the fiscal year. We are going to end this fiscal year at about 6.9 trillion. That is an all-time record of spending. That is up about 1.9 trillion from last fiscal year. Amazing. It's been an amazing, just incredible. And this all was in response to COVID. Now, I've said several times that I don't think this level of spending is going to come down by any appreciable amount, regardless of the election. The election itself, and by the way, I guess everybody watched that dumpster fire of a debate last night. It was crazy, as I said. I mean, very combative. Trump was his usual combative self. Biden, I guess, held his own. I mean, to me, he looked like a warmed over corpse. But it is what it is. I mean, that was a crazy debate. The market was down in early trading, and then we had a big up day today, which I don't think you can really take any message from that necessarily. What I want to say is, I don't think, in spite of what could be volatility from the election itself, just emotional reaction, I mean, I could definitely foresee that happening, just an emotional reaction. And if it gets really crazy, like I was talking about, like Trump loses and he doesn't want to get out, or Biden loses and he doesn't agree with the election results, it can get really wacky. So, I mean, you could have a lot of emotion injected into the market, and I absolutely see that as a possibility. But underlying all of that, I mean, we have to get back to the numbers. And the numbers are what they are. I mean, they're enormous. I mean, when you have this much fiscal support, it's just really, really hard to come to some kind of a conclusion that the market and the economy is going to have a big contraction. And for the millionth time, I'll say, yeah, all this spending isn't equally distributed, unfortunately. I'm not the guy controlling policy. If I was, it would be a lot different in terms of the way the fiscal support is being applied, but I'm not in there. But in the aggregate, there's an enormous amount of money in the economy. And like I've been saying, you can equate that, if you want to use a metaphor for that, that is like a powder keg of gunpowder waiting to blow up. You need something to trigger it off. You need a spark. You need a catalyst. And right now there's a lot of anxiety. But in spite of that, I mean, you see the buoyancy in the market. We had the correction in September. I forecasted that. I told you that was going to happen based on corporation income tax flows, which I saw were slowing down and they went negative year over year. But the trend in those tax flows has been improving. There's enormous amount of fiscal support. Look, there's 15.8 trillion sitting in bank deposits. That is like a mind-blowing record number. I mean, we've never even approached that. There's over 3 trillion in savings, when historically, like, if we got up to 700 billion in this country, that was like, wow, that's incredible. I mean, we are over 3 trillion. So there's an enormous amount of, monetary support there. It's just a question, I think, of, things got to keep opening up. Confidence has to come back. And I think slowly that's happening. We got to get past the election. That's a big anxiety thing going on right now. And last night, that was just a tiny little taste. That was just a little, taste of what it's going to be like. I mean, with those two going at each other last night. So you got to stick with the numbers. 6.9 trillion. And again, I don't think that's coming down very much, even if we get a change in administration. I mean, it's going to be really hard to bring that down with the COVID. And once, this is just the way things are. I mean, once spending gets up to a certain level, it's very hard for them to cut in any meaningful way. So that's the reality. And that's going to be the reality going forward, which means this market, to me, probably has a lot more upside. And, you know, of course, accounting for any kind of emotional reaction that might come in November. But anyway, end of the quarter, end of the fiscal year. You know, as soon as we start tomorrow, the new fiscal year, I'll be able to see the flows, the fiscal flows, and compare them. You know, I'll know this like right away. Within the first few days, within the first couple of weeks, I'll already be able to compare what the spending looks like. And look, there's been no changes. I mean, the Senate just passed a spending bill tonight to avoid a government shutdown. So there's been no changes. So it's just going to continue like this. You know, if Biden gets elected and there's a new Congress and we get new policy and new changes, if they specifically talk about cuts or raising taxes, I mean, then we can anticipate that. But right now, it's just, you know, the status quo. And that's kind of leans to the bullish side. So anyway, that's it for today. Go to my website, sign up for a 30-day free trial of MMT Trader. See everybody tomorrow. Bye-bye.